Welcome back to Morning Markets on Friday the 9th of April. George Bell here, investment analyst, to bring you up to date on the key market moves over the last 24 hours. A positive day for equity markets. Here in the UK, FTSE 100 was up 0.83%, outperforming mid-cap with the FTSE 250 up 0.39%. Small cap slightly stronger, up 0.82% on the day. In Europe, the Euro Stoxx 50 was up 0.53%, supported by improved sentiment and factory order data, which is a leading indicator from Germany. Realised output data for February has came in slightly lower than expected this morning in Germany. This was a month of tighter activity restrictions. Reassuring words from the Federal Reserve in the US on Wednesday were also attributable to the appetite for equity risk in international markets yesterday, despite the ongoing discussions of potential tax hikes in the US. Over in the US, we have seen a calmer notion in implied market volatility, with the VIX index pulling into a level of 16.9 on the day, levels last seen in 2019. The S&P 500 index was up 0.36% on the day, with technology stocks the strongest performer. This was evident in the Nasdaq Composite, which was up 1.03%. After a series of positive data points in the US, including manufacturing and service sector PMIs, the initial jobless claims data yesterday was slightly disappointing, highlighting that 744,000 Americans registered for initial support in the week beginning April 3rd. That was higher than anticipated at 680,000 and some 16,000 higher than the previous week. But that level hasn't peaked above 800,000 in 7 weeks now, so it's not demonstrating a significant negative acceleration. From Asia overnight, the key data points were coming from China. You had the Shanghai Composite Index, which was down 0.9% as inflation data, influenced by producer prices, which were up 4.4% on the month. Probe debate amongst market participants around the potential for monetary policy tightening. In currency markets, sterling was slightly stronger on the day, up 0.8% against the Bank of England's basket of international currencies. US dollar slightly weaker on a trade-weighted basis there. Dixie index down 40 basis points on the day, continuing that general trend of dollar weakness which we've seen month to date, which was reversing the trend which we experienced in the first quarter of 2021. Cable, so sterling against the dollar, currently trading at a level of around 1.37. In bond markets yesterday, the yield on UK 10-year and 30-year gilts were down 2.4 basis points and 3 basis points to levels of 0.74% and 1.28% on the day, reflecting a positive move in price. In Europe, commonly used indicators within the European bond market are Italian and German bonds. These reflected modest change, with the 10-year yields on the pair coming in 3 basis points and 1.1 basis points. Moving shorter and longer dated maturities were more moderated. This follows the meeting of the European Central Bank, who agreed to review the purchase of bonds under the PEP programme on a quarterly basis. So in that, they were expected by June to be able to start to trim back the value of monthly purchases, which was increased last month as a mechanism to manage the rise in bond yields which we were seeing. In the US, 10 and 30-year Treasury yields were down 5 basis points to 1.62% and 2.31%. Inflation expectations remain higher than what we've experienced over the last 12 months, and we've been discussing this in detail, especially in the US, but also internationally, as market participants factor in the benefit to the economy of fiscal stimulus and the vaccination program progression. 10-year break-even yield rates in the US are currently at a level of 2.32%, and the 5-year slightly higher at 2.59%, reflecting the anticipation of a near-term uplift there. Inflation was addressed again by Powell on Wednesday evening, who recognised the potential to see an impact on inflation, so an increase in prices there from supply chain disruption, but did not suggest that this was a significant concern, later stating the Fed have the tools to curb inflationary pressures if needed. Lower real bond yields, so adjusted for inflation, and a weaker US dollar were positive for gold, prices up 1.1% on the day. Commodity prices in general were slightly higher, measured by the index up 0.75%. Energy, a key component of this. We had Brent crude up 22 basis points on the day, so Brent crude trading at a level of around $63.3 per barrel. Oil trading slightly lower this morning after Saudi Arabia reinstated their intention to let supply levels run slightly higher in the coming months. Thank you for watching. Have a great weekend, and we look forward to bringing you up to date on Monday morning.
Thanks for watching. If you enjoyed this video, please leave a like and don't forget to subscribe to the True Potential YouTube channel. If you have any questions or requests for future videos, let us know in the comments.